Stocks dip after a steady start on caution ahead of the US elections and uncertainty over China's economic recovery, even as geopolitical worries continue to linger. Auto and realty are the big drags, but IT manages to eke out some gains.
Bajaj Auto Executive Director Rakesh Sharma tells CNBC-TV18 the festive season has seen a soft start and he hopes for a pickup by the end. The comment spooks two-wheeler stocks on the inline earnings but softer margins. Sharma points to the growing share of margin-dilutive EV segment that has boosted the auto major's green energy portfolio to 44% of sales.
City gas distributors will see nearly 20% lower gas allocated at administered prices, leading them to raise imports of LNG to meet the demand. CNBC-TV18 has learned of this information. The move can hurt profitability if the costs are not passed on.
Noel Tata may join the Tata Sons board as a third nominee of the Tata Trust. CNBC-TV18 has learned a meeting of the board of Tata Sons is likely soon to take up the matter.
And China's latest briefing on stimulus to boost the housing sector underwhelms yet again. The lack of new features and scant implementation details are the dampeners. The disappointment is reflected in the metal stocks pulling back.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me today is Hormuz Fatakia. Well, it's turning out to be a session which is definitely weak and under pressure for the markets. So we have the Nifty, which is down around 193 odd points, the mid-cap index, which is down around 1.3%, and we have the advanced decline ratio, which is trending on the declining side. Just want to point out that, obviously it is the commentary from Bajaj Auto, which is dragged, and you can see that clearly in the double-digit decline that we're seeing from Bajaj Auto, and that's dragged down all of the other auto stocks today, and that will be the key focus in the next couple of minutes in terms of our discussion. But besides that, we do have a lot of results to watch out for, so commentary will be important from the rest of the companies as well. For example, Infosys, Axis Bank, to understand what kind of retail loan growth they have will be something that the street will probably watch out for, and any kind of asset quality issues that they might face. LTI, Mindtree, Wipro, Nestle, again, a lot of stocks to give us a sense in terms of what is happening on the ground when it comes to demand. Hindustan Zinc, ICICI General Insurance, Mastech, Geo Financial Services, Z Entertainment, all of these companies coming out with results tomorrow as well as we end the week. So a lot to watch out for, Hormuz.
A lot to watch out for indeed, and also need to watch out for the weekly expiry for the Nifty this afternoon, and the index is under pressure, where at one point we were talking about the higher end of the range, the start of the week, which was around 25,250, but now we are talking of the lower end of the range. Now 24,750 is very much in sight. At the lowest point of the day now is the index 200 points lower. The Nifty Bank was one index that could have led the index higher, but that has not happened as well. That index too is turning out to be a big drag. 51,250 is where the index is, 500 points lower. And as Ekta was mentioning, a lot of earnings to watch out for. We're watching out for Nestle, that could come out with results anytime now. And of course, the pressure that continues on the auto companies. The broader markets too are seeing some bit of pressure. But speaking of autos, Bajaj Auto is witnessing a big fall in today's trading session. It's the biggest fall since March of 2020, and that is on the back of cautious management commentary that came in post its Q2 results. And this has also driven its other peer companies lower as well. Sudarshan is joining in with the details with what has led to this big fall. Sudarshan.
That's correct. So along with Bajaj Auto, all the auto stocks are currently lower and sharply under pressure in today's day, and this comes after Bajaj Auto has reported earnings. Those earnings were largely in line with estimate. But what has surprised market is Bajaj Auto's commentary about festive demand. But before I talk about that, let's check about the stock performance. Even in the last few weeks, like before Q2 earnings started, we saw a major fall in all these stocks. Auto index is down almost 10% from the record high that it hit on September 27. All the constituents are down this month and even this week as well. Bajaj Auto is down almost 13 to 14%. Hero Moto is down almost 6 to 7%, followed by Maruti, M&M. All these stocks are down. So what are the reasons for recent fall? First, festive demand is below expectations. Retail registrations show muted demand in the first half of the festive season, and it's confirmed by Bajaj Auto. In the chat with CNBC-TV18 today morning, company has said two-wheeler industry growth in the first half of the festive season was in the range of 1 to 2%. and that is against companies' expectations of industry's growth in the range of 5 to 6%, and brokerages were expecting a growth in the range of 8 to 10%. And some of the other reasons that if I can point out, first, concerns are related to inventory buildup. Brokerages have been pointing out concerns related to inventory ahead of Q2 earnings. Second, we have been seeing an increase in raw material cost for the last few months. Third, demand for Hyundai IPO has been muted as of now. Just till half an hour ago, total subscription was 51%. And last, there is no valuation comfort in most of the auto stocks. If you look at for Bajaj Auto, FY26E PE is at 28 times against 5-year average of 20 times. For M&M, it's 26 against 17 times. Similarly, for Hero Moto, 20 times against 18 times. So these are the major reasons that we are seeing a major fall in all these stocks today.
Okay, absolutely. Well, disappointing there. And let's just wait by, because we do understand that the Nestle numbers could be out anytime soon. So let's see what they come up with. Remember that the stock is around 12% off its 52-week highs at this point in time. But obviously, valuations are extremely punchy for Nestle. Revenue is expected to grow probably around 5 to 6%. The profitability is expected to grow just about below 10% this quarter on a year-on-year basis. So these are the expectations that we have. And margins should probably be stable at around 24%. The volume growth is expected to come in at around 1 to 2%. It'll be interesting, almost, to find out, what Nestle is also saying about demand after we heard Bajaj Auto, what they are saying about demand on the ground as well. So that's the net profit, which is flashing on your screen. 899 odd crores is where they've come in at. So that's a growth which is above what the street was anticipating. So our poll was around 877 odd crores. So it's better than expectations. That's the preliminary figure which has come out for Nestle in terms of the bottom line. But nonetheless, this time round, there was a fear that there could be a higher amount of cocoa and coffee prices, which could probably impact numbers. We have the revenue, which is below expectations. So that has actually missed. So 5,104 crores versus expectations of around 5,357 odd crores. In fact, it's a decline. No, it's just about a flattish performance on a year-on-year basis. Barely any growth that they've recorded on a year-on-year basis for the revenue. The profit, however, is better than expectations. So I'm assuming that the margin should be stable.
I was reading about the management commentary as well, right, in the release, and they are mentioning that the demand environment was extremely challenging. Consumer demand was muted, and 5 out of their top 12 brands have grown in double digits this quarter. But some of the brands have witnessed pressure due to soft consumer demand, and as a result of which there is the pressure that you can see their revenue below estimates, slightly below estimates, but the net profit in line with expectations. Kaustubh Pavaskar from Sharekhan by BNP Paribas is joining in now to talk about these numbers. Kaustubh, profit in at almost 900 crores. The revenues coming in at just over 5,100. Margins are below our expectations, 22.9% compared to a 24.2% poll. How do the numbers look like on first sight?
Yeah, so revenue numbers are below estimate. Obviously, we and Street were anticipating around mid-single digit kind of a revenue growth, but for the domestic business and for the overall revenues came at around 5,074 crores. I think it is flat almost on YOY basis, and profit are slightly better than expectation. Again, on margin front, at the EBITDA level, we and Street were anticipating around 23 to 23.5% kind of a margins. EBITDA margins came lower than expectation. So operating performance is below expectation, but on PAT front, the numbers are largely in line.
Okay, all right. We do have Prakash Diwan joining in. As you can see, the stock is now at the low point of the day. It's down around 1.3%. Margins have come in at 22.9%. So it's a top-down disappointment which Nestle has reported at this point. Prakash, hi. Welcome to the show. Well, before we talk about the numbers, I just want to talk about the fact that there is this the commentary from companies are indicating a muted consumer demand at this point in time. It could be high value items such as two-wheelers as well, in contrast to what Nestle sells. But Nestle has indicated as well, despite a challenging external environment with muted consumer demand and high commodity prices. So they've alluded to muted consumer demand, and we heard that from Bajaj Auto in terms of festive demand being below their expectations in the first half. What are your takeaways from this? Are we facing, a prolonged slowdown here?
So, it's a bit too early to call out whether there is absence of demand revival because what's happened is this time we've had a fairly long and very long stretch on the monsoon phase. And post that, I think it's still going to be a while before the harvest proceeds get into the hands of consumers and the spending starts. So I think by the time we are through with the festive season, end of November, that's when you'll probably start getting. I know it's too short a period to make any kind of an assessment even from here to that period, but that's where it will happen. My sense will be very different except for different segments. What Nestle probably experiences is going to be very different from what a Hero or a Bajaj would experience. Given price points, given the propensity to spend on some of these things. So it's going to be a mixed bag, but I don't see any revival as yet. There's nothing which indicates that demand is robust or is likely to be very robust.
Prakash, good afternoon. Thank you for joining. And I wanted to speak about the e-commerce bit. Mentioned that e-commerce business delivered high double-digit growth, the highest in the last 7 quarters, and it's now nearing almost double-digit of overall sales as well. Is this a trend that is emerging among a lot of these companies, right? You heard a lot of these FMCG players also talk about. We heard DMart also saying that e-commerce has been hurting, or quick commerce has been hurting their business as well. What's your take here? Because e-commerce as a channel for Nestle as well is continuing to grow.
No, absolutely, Abhi. So I don't see any reason why this will not be a very strong long-term secular trend for us to factor in. E-commerce, remember, it's not just the factors that have led to this robust growth. The setting up of the base for this is the UPI payment availability and, of course, internet connectivity and now logistics. I mean, I have met a couple of companies which are amazingly equipped to manage e-commerce even in tier 3 towns in India, given the way, 3PL logistics and packaging and sorting and all of that is kind of getting automated. There's a huge technology interface which is bringing down costs and enabling things, which means this will only grow from here and at a pace which is far higher than what we have seen till now. Now, quick commerce, of course, could probably be a bit of an urban, metro-ish kind of a phenomenon for some more time. I'm sure there are reasons for it to start getting accepted in other cities as well. But for the next couple of years, you might see that to be a metro phenomenon. And e-commerce across the board as an omni-channel kind of a constitute will probably be very strong in tier 2, tier 3 cities. That contribution will become much bigger, it's my sense.
Okay, all right. Well, the stock is now down even more. So we're seeing profit booking from the top coming in on Nestle on the back of what is a disappointing set of numbers, you'd have to say. Naveen Kulkarni of Axis Securities joins in with his view as well. Naveen, hi, welcome to the show. Stock down around 2% reacting to what has been a top-down disappointment. The profitability has been maintained and better than expectations, but I think what's really hit hard is probably the revenue as well as the margins, which have come in at 22.9%. What's your assessment on Nestle's numbers?
Yeah, so the margins are definitely lower than what we were expecting by close to around 80 odd basis points. So that's definitely a lower number. So I think the revenue being lower has had an impact on margins. But having said that, this quarter, Q2 has generally been a slow quarter for the consumer sector, right? So broadly, whatever companies have reported, there has been a certain degree of disappointment, even if we look at the retail companies' numbers also. So I think we have to wait and watch. Probably Q3 onwards, things could be expected to pick up. On the other hand, Nestle has been one of the better performing FMCG companies for a while now. And from that perspective, probably things could look better in the forthcoming quarters.
Kaustubh, I wanted to ask you, the company is also mentioning that commodity prices remain elevated, especially for coffee and cocoa, and the prices of cereal and edible oils have also accentuated with the recent developments. Now, with the kind of margins that Nestle has delivered at 22.9%, do you see that there is a scope of further margin deterioration in the subsequent quarters, say in the current quarter itself, now that we are into the third quarter with these rising input prices?
Yeah, so we believe that margins will remain under pressure for Nestle, and companies, we have seen that companies are a little conservative in terms of price increases. So we don't expect price increases to happen in line with what the commodity inflation is. It will be, in a gradual manner. So in the near term, if the commodity prices continues to rise, I think margins will remain pressure. And that is something which we are expecting for most of the companies under our coverage.
Okay, Naveen, what's your sense in terms of the volume picture this time for Nestle? The estimates were 1 to 2%.
Yeah, so we were expecting the volume number to be in the range of around 2%. Primarily, the growth was expected on account of price. So I think even the volume numbers don't look very, very encouraging at this point in time. I don't have a ready estimate to put out right now, but yeah, even the volume numbers could be a little sluggish, right? So, but I
when
think
you say sluggish.
Yeah, it could be flattish is what I feel. So we need to put down exactly the numbers to figure out how much the volume growth would have been.
All right, Naveen, Prakash, Kaustubh, thank you so much for joining in and sharing with us your views on the numbers coming in from Nestle. Disappointment on the margin front and revenues to miss on expectations. EBITDA 2 down 5% on a year-on-year basis. The stock down from the highs of the day, 2% lower. Currently trading at 60 times FY26 earnings and on a 5-year average is 80 times. So it's still trading below its 5-year average if you would want to take a positive view of that. But at the lowest point of the day is Nestle after its earnings. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. We'll be right back. Back with us here on Halftime Report, and the focus remains the auto sector and the underperformance that the stocks are witnessing today after the commentary that came in from Bajaj Auto. And to discuss the way forward, we are being joined by Sai Giridhar, the Vice President of FADA, who is joining in the Federation of Automobile Dealers Association. Mr. Giridhar, good afternoon. Thank you so much for joining in. We just spoke to Bajaj Auto this morning. It's one of the leading two-wheeler manufacturers in the country, and they are saying that festive demand has been very muted so far, at least lower than what they were anticipating. What's the situation that you are witnessing on ground? Is there an actual slowdown seen in automobile demand for whatever little festive period that we have had so far, be it from the start of Navratri until date? What's the picture that you are picking up?
So as far as we are concerned, the data which we have taken out is for the first 10 days of Navratri, from first Navratra till Dashmi, and we see a double-digit growth, in fact. And if you're talking about specific two-wheeler segment, in fact, there is a 12% growth if you compare it with the same period last year. So last year, the first Navratra was from 15th October till 24th October, if you see the data. So there's a growth of approximately 12% as far as two-wheeler is concerned. Overall, there's a growth of, the growth is in double digit, and only specific segment if you talk about is the tractor segment, wherein we are seeing some challenges, some negative growth, but rest, everything is in green.
Okay. So only the tractors you're seeing some amount of challenges, but otherwise for the two-wheeler segment in particular, you've already recorded around a 12% growth in terms of the festive season. That's what you're saying, Mr. Giridhar. Then, this is completely contrary to what Bajaj Auto indicated to us when they spoke to us in the morning. So what do you think might be the issue there?
See, this festivity is all about discounts. It's all about availability of stocks, because the customers are there. We've seen a 3x or 4x increase as far as the walk-ins are concerned, the telephonic inquiries are concerned. So there are a lot of customers. Because we had anticipated a pent-up demand, seeing the last few months, the way they've gone by, the heavy rains, and before that, the extreme temperatures. So the pent-up demand was there, and we're seeing the results. So the customers are there as far as the in the market are concerned. The only thing is the conversion, and the conversion is happening. This festive is only and only on the schemes which are available with the dealers.
So, Mr. Giridhar, would you attribute this growth that you have seen in the first few days of the festive season to pent-up demand, or would you actually call it proper festive buying that people generally do, or you would say a combination of both of them?
I'll prefer to say it combination of both. I can't predict everything, but as far as the overall festivity is concerned, earlier we had predicted a 20% growth. So last year, if you see, in this 42 days of festivity, approximately 38 lakh vehicles were sold in India. This year around, we're targeting approximately 45 lakh vehicles. And there is a reason to it. Last year, the availability was not there. The customer was made to was not able to choose the right mix of variants which he was wanting. There was a shortage as far as the availability of vehicles were concerned. This year, there's ample availability. Everything is available off the shelf. That's the reason that we are anticipating approximately 20% growth. And first 10 days of Navaratri is contributing 20% to overall business if you talk about. So we are in line to achieve this 20% growth.
Okay. What is the proportion of EV sales within this 20% growth that you're anticipating?
So EV is, we'll have to take out the data. We don't have the exact numbers as far as the EV is concerned. But if you talk about two-wheeler segment, EV is approximately 5.5%. Passenger vehicle, it is approximately 2.5%. But we see a turnaround as far as passenger segment is concerned with the new variants which have been launched. And we see that 2.5% to increase to approximately 3.5 to 4%.
All right, Mr. Girdhar, thank you so much for sparing time and taking us through what is the actual scenario on ground currently for the first initial phase of this festive season. Interesting, right, Ekta? One of the largest two-wheeler companies saying that demand is not there. The Federation is saying that there's 12% growth.
Absolutely. Well, it'll be interesting to see what kind of schemes there are and discounts and whether they pick up as we go through the festive season as well, but contrary information or commentary coming in from both of those. We'll take a short break, but up next, Nigel will be joining in. He'll tell us what he's tracking on the F&O space.
Welcome back. Now in a conversation with CNBC-TV18 Shireen Bhan, Zerodha CEO Nitin Kamath comments about how the startup ecosystem in India is advancing and how Zerodha's founders are supporting these startups via venture capital. Listen in.
That brings me to the question of 14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this? What do you see as the use of this organization? What do you see as the use of the money that you're making individually as well as at a company level? I mean, what will the next 14 years, for instance, for Zerodha mean from that perspective? Let me start by asking you.
Yeah, I mean, today I get really excited with all the startups we support. Like, there were 150 investments from Rainmatter, and we've allocated like 750 crores or something like that. So, and Kailash gets really excited with the foundation. I'm also excited, but I'm not in it completely, because I still haven't yet found the cause that I really want to support, as in, something which is close to my heart. So there also we committed a significant portion of our capital. I mean, the idea right now is to do 1,000 crores and then see how it goes.
Okay, and you can catch the full interview on our special Young Turks Reloaded today at 7 p.m. Stay tuned for that, only on CNBC-TV18.
And as we slip into a short break, here's a programming note. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers, industry leaders, and trailblazing startup founders. This is where India's roadmap for the next 25 years of growth and global leadership will be charted. Don't miss your exclusive opportunity to be part of this conversation that is shaping the future of business and innovation. Reserve your spot today.
Welcome back. Well, for the markets under pressure, so the Nifty is now down around 184 odd points. Just want to point out that the Hyundai IPO details have been updated. So totally based on the consolidated bids, it currently stands at around 0.86 times. And just a breakup of it, the QIB has been very strong, so 1.99 times. You saw it in the anchor investor book as well. And the non-institutional investors totally has come in at around 0.47 times at this point. And we do have the retail, which is currently at around 0.43 times. So let's see how that goes. But currently, the total subscription stands at 0.8 times. Not bad.
Almost there. Almost there. This is India's largest IPO.
Yeah.
You know, I was just checking the so far, which is India's largest IPO, which was LIC.
Yeah.
That was subscribed 2.95 times on the final day of bidding. And Paytm, which was the 18,300 crore IPO, that was subscribed almost 1.9 times at the close of bidding. So they're a large an IPO, so we'll see how the final figures turn out. But for now, shifting back, focus back to the markets, then the Nifty continues to remain at near the lowest point of the day. Nigel is joining in with how the FNO setup is looking like at the weekly options expiry day. Nigel, good afternoon.
You know, Hormuz, when you have a team that's batting, you like your openers to do well and the guy that comes one down as well. In Nifty's case, you have three pillars of the market, right, of the Nifty. That's the banking names, the IT names, as well as Reliance Industries. And today the problem is the main player is not able to get off the mark, because the Nifty Bank is under pressure while Reliance is holding in the green because the record date came out and the IT index is powering its way ahead. So, you know, that's why we're not able to put on any kind of gains because the largest constituent is pulling us back. And with the Nifty Bank, you know, we're at very, very crucial levels. You don't want the Nifty Bank to close below these levels. Just to put it up on the screen, the 50 and the 100 DMA are up for you in the screen. In the last few minutes, we've gone ahead and we're trading below the 100 DMA, which comes in at around 51,350. We're around 50-60 points below that level. You'll want the Nifty Bank to gradually cross this 100 DMA and head towards the 50 DMA. Now, that's what will give the bull some kind of comfort. For the time being, we haven't yet seen that happening. On the Nifty, well, we have a weekly expiry that plays out today, and a couple of strikes should come up for you. So the 25,000 put was seeing a fair bit of open interest build up, but today it seems some of those bulls are throwing in the towel because there's big unwinding that we're seeing at that particular level. And the bears are feeling confident. That's why we have the 24,800 call that's seeing a lot of open interest build up, and the premium out there has crashed down to around, I think, 20 rupees from around 200 rupees. So it's the aggressive writing that we're seeing on that strike. The important levels you want to see in terms of a support level, you don't want to see the recent low getting hit, which was close to around 24,694, which is an important mark. And the 24,500 mark as well is an important mark because that's where the 20-week moving average comes. Stocks that we're looking at, Bajaj Auto, massive open interest built up over there. Big shorting is what we're seeing out there. On SBI, there's a bit of a short covering bounce that's playing out. And finally, on Infosys, getting into its numbers, there's fresh long built up out there.
Okay, all right, Nigel. Thanks very much for that. So that's on the FNO space. We'll take a short break. More stocks on the other side. Stay tuned. Welcome back. Well, further disappointing news coming in for Nestle because their sources have indicated that it is a volume decline that they've reported this time round of 1.5% versus an estimated 1 to 2% growth. We did have Naveen Kulkarni allude to the fact that it would be sluggish this quarter based on the numbers that they have reported. So a Nestle volume decline of 1.5% is a complete shocker. As you can see, the stock is at the low point of the day, down around 3.6%. We'll get you more details on probably when was the last time they did see a decline in terms of volumes, but this definitely is weighing on sentiment and weighing on the stock. Remember, Bajaj Auto is the other one which is sulking on the back of poor commentary. That stock down around 12% now. But Axis Bank will be reporting its Q2 numbers today as well. Mamakshi joins in with key expectations. Mamakshi.
Well, yes, Ekta, Axis Bank will be reporting their numbers today. Net interest income is expected to come in at 13,620 crores. This is an uptick of almost 10.6% that we're seeing on a YOY basis. The net profit is expected to come in at 6,300 crores. Out here, we're expecting a growth of 7.4% on a YOY basis. Largely, let's also look at some of the key expectations from brokerages. Kotak is building in loan growth of around 11% YOY and 2% sequentially. They expect NIMs to be stable sequentially as they believe that we are past the repricing of funds. They're expecting NIMs of around 3.8%. The fee income growth could also be sluggish in their opinion, reflecting weak loan growth. They're expecting slippages of around 5,000 crores, which accounts for nearly 2% of the loans, and this slippage could most likely be led by the retail segment. Bernstein believes that the credit cost costs are expected to see significant moderation as compared to what we saw in the first quarter. Now, those were the expectations, but what will we be watching out for? We will be keeping an eye out on the credit cost. That is very important because, last quarter we did see a very sharp jump in the credit cost. In fact, the rise in the credit cost last quarter overshadowed most of the positives like stable NIMs, a sharp decline in OPEX growth. Deposit mobilization will be another factor that we will be watching out for. And lastly, keep an eye out on the NIM trajectory as well.
Axis Bank, one of the 4 Nifty constituents reporting results today. Of course, Nestle has already come out with numbers, so 3 more to go. We'll keep an eye out on all of these. The stock at the lowest point of the day now, 2.5% lower. Time for a short break. Up next, Manisha Gupta will be in conversation with Ragnar Udd, the global CEO of BHP. On the other side, stay tuned.
Welcome back. Well, week for the markets, but let's talk about commodities now. Manisha Gupta caught up with Ragnar Udd, who is the global CCO BHP, and spoke with him on how the company, as a leading mining player in the world, is looking at sustainability, cost effectiveness and decarbonization and new sectors that the company is looking at in terms of future investments.
For BHP, our own story in terms of decarbonization, we've already achieved 30% reduction in our Scope 1 and Scope 2 emissions relative to 2020. Something that we're very proud of, but nonetheless, we know we have a long way to go forward. And so part of that, and the biggest part for us in terms of Scope 1, remains around diesel and reducing diesel usage from our vehicles in the longer term.
I'll move on and talk about iron ore, another very important one in your portfolio. What's your sense here on supply, prices, demand, etc.?
So in terms of supply, we see ample supply in the market at the moment. Demand is moderating, and what we're seeing in China is for the 6th year in a row, we see them sitting at about 1 billion tons a year of steel, but a very different type of billion tons of steel as compared to 3-4 years ago. We believe that India will also continue to grow from about the 150 million tons of steel being produced at the moment to close to 300 million tons over the next several decades. So an exciting spot to be in. That said, we do know that, again, iron ore will be slightly different because India tends to be self-sufficient when it comes to iron ore.
But we do take price cues from the international market, so that's a market to keep an eye on.
Indeed.
When you talk about the Indian, associations here, you've recently signed an MOU with SAIL India. You have association also with Tata Steel. How are these markets treating you? What is the kind of further partnerships that you are doing here?
So great reception within India, and I can share with you not only in terms of SAIL and Tata, but more recently we signed an agreement with JSW as well. So now we're associated basically with the 3 largest steel producers in India with a pathway towards decarbonization. And we recognize there is no one single solution on that at this point. So we're partnering on CCUS, CCS, different ways of actually producing steel, whether that's electric arc furnaces, electric smelter furnaces, or even electrolysis. But this will play out over the future, and it's important for us to actually pursue alternate pathways there towards that outcome.
I will move on to another commodity which BHP does a lot in, and that is metallurgical coal. As a market, how is that building up now? And when you look at decarbonization and when you look at coal on the other side, how are you balancing it both?
Metallurgical coal is an interesting commodity, and the world seems to be a bit fixated on coal and the impact of coal, as opposed to the emissions that are actually generated from it, which I would advocate are actually the area that needs probably the bigger focus. We believe the coal that we produce is the highest qualities of coals. And so against that overlay, we believe that blast furnace technology will continue to play an important part in terms of steel production, and therefore the development of certain countries, including India, over the next 20 to 30 years. And therefore having the highest quality products you can use in that steelmaking process is essential. And so we will continue to partner with a number of Indian steel companies to actually help bring that product to market.
For the longest time, I was following BHP also for nickel. In the last couple of years, that story seems to have really gone down, especially with what happened with prices in 2022. Where do you stand on nickel right now?
Oh, nickel is a tantalizing commodity because it actually has scale. And we actually see the demand being very strong in terms of nickel in the foreseeable future because we think it is linked to battery technologies and how that will unfold. But what has changed here has really been about supply, and Indonesian supply in particular, where we will see Indonesian supply increase basically from 5% several decades ago to over 60% of the world market this year. And so what that has meant is that we've seen prices depress quite significantly, going from about $25,000 a ton down to about $15,000 to $17,000 a ton. And so what that means is we put our business on temporary suspension at this point. We'll revisit that in the next couple of years because we think that there's potential there, but that really depends on both demand triggers and supply signals as well.
All right, so how long are you going to review those businesses? Some of the reports suggest 2026-27 perhaps.
2027 is the year we'll actually get back into it.
All right. I will move on now to potash, and that really is the upcoming one for you. With the kind of spend that you're making in Canada with this one, where are the plans right now? What is going to be the total spend? How are you looking at the profitability onto this one?
We are so excited about getting into potash, and there's a strong linkage to India on this one as well. And the reason why we've actually decided to get into potash is this is a world market of about 70 million tons a year. So it's got the scale that we look for as an organization. And what we've seen over the last 50 years is a demand signal that's growing on average about 2 to 3% per year based on growth in population. And it's against that overlay that, having now secured a very large tenure in the Saskatchewan Potash Basin, we're so thrilled to be bringing on our first phase project, Jansen Stage 1 and Jansen Stage 2, between late 26 and 2029 as we start to ramp up to about 8 million tons a year capacity. Now, we think this is something the world needs, and particularly in India, how we think about fertilizers and food production, this is something we're looking forward to partnering with Indian companies on.
All right, that is a wrap on this edition of Halftime Report. From Ekta, me and the team that put this show together, thank you so much for watching. Business Lunch takes the action forward.